Welcome. In this video, when will the Xcn coin giant increase come? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the chart, we can see a notable support zone just below the current price. This area has previously acted as a strategic level where strong reactions occurred, buyers stepped in, and the market reversed upward. Therefore, if the price pulls back toward the support zone, there is a high likelihood of a strong reaction. These kinds of support zones are often referred to as demand zones in technical analysis, as buyers tend to become active again when the price reaches these levels, creating a solid foundation for a new upward move. Looking at the current price action, we observe that the price is approaching or occasionally testing this support area. The strength of this zone is clearly evident from past price reactions. During previous tests, this area served as a strong defense and set the stage for notable price increases. This shows that the zone is being closely monitored by investors and is seen as a favorable entry point. Technically, this is a highly positive sign, as investor psychology appears to be shaped by optimistic expectations around this level. In particular, the recent increase in volume as the price nears this support level may indicate that this area is being taken seriously by the market and that institutional or large investors are beginning to take positions here. Support zones that are backed by volume generally form stronger bases, and the price tends to respond with powerful upward moves. In the current scenario, the likelihood of such a reaction appears to be quite high. As long as this support level is not breached, it can be said that the market's positive scenario remains intact. Every upward movement is typically followed by a correction, and during these corrections, prices pull back to healthy levels. These pullbacks often conclude at such support zones. In this case, a retreat to this support area should not be seen as negative, but rather as an opportunity. These support zones give investors the chance to enter positions at lower prices, offering a significant advantage for long-term investment strategies. Additionally, there is a frequently emphasized rule in technical analysis. Support remains support until it's broken. Resistance remains resistance until it's broken. The data currently available shows that this support level has not been broken. On the contrary, the price has respected this level, and it continues to function effectively in the market. Therefore, a potential pullback to this level, while it may seem risky for short-term traders, carries a high probability of a strong rebound from a broader perspective. Moreover, price increases that originate from such support zones often begin as reactionary moves, but can lead to trend reversals and new upward momentum. If this rise is coupled with a breakout of resistance levels above, it could mark the beginning of a more significant uptrend. As such, this current support zone may serve not only as a short-term bounce area, but also as the starting point of a longer-term rally. It's important to remember that price behavior is often directly tied to investor psychology. Strong support levels give investors confidence and lead to an increase in buying activity. That confidence is built on past positive price reactions at the same levels. The support zone the price is now approaching has proven itself repeatedly in the past and is respected by the market, making it important not only technically, but also psychologically. In conclusion, the support zone just below the current price holds significant importance in technical analysis. Given the current price action and market structure, a bounce from this support area is highly likely. But of course, we can't base our analysis solely on support, so let's take a look at some other metrics. Stay tuned. When we carefully examine the chart, we can see the formation of a falling wedge, which carries highly characteristic and technically significant signals. This pattern is considered a bullish and reversal signal in technical analysis. A falling wedge typically forms at the end of a downtrend and indicates that selling pressure is diminishing, potentially signaling an upcoming upward reversal. This wedge structure gradually narrows over time, showing that the downward momentum is weakening and the price is losing steam. In other words, each new low becomes less aggressive than the previous one, and the highs form at lower levels. However, the most notable feature of this process is that the structure increasingly resembles a narrowing triangle, indicating energy compression that could lead to a strong breakout at some point. If this falling wedge breaks to the upside, it often signals the start of a strong new uptrend. The current falling wedge on the chart appears to be forming in a technically healthy manner. The price is moving within the boundaries of the wedge, gradually tightening, which signals that the balance between buyers and sellers is slowly shifting in favor of buyers. Especially the recent candlesticks, showing long wicks and indecision, suggest that the market may be preparing to end this pattern, hinting at a potential breakout. In such patterns, the most critical level is the upper boundary of the wedge. This line acts as a dynamic resistance. A breakout above this line indicates that selling pressure has significantly diminished, and the market is consolidating for an upward move. If such a breakout occurs, it can generate not only technical confirmation, but also a psychological shift in market sentiment. Breakouts from this type of pattern often instill investor confidence and trigger new waves of buying. Additionally, price tends to gain strong momentum following such breakouts. The energy accumulated during the compression phase is often released all at once, leading to sharp upward movements. If the breakout is supported by strong volume, the likelihood of the price not only surpassing the wedge's upper boundary, but also climbing to much higher levels, increases. In technical analysis, volume-supported breakouts are typically seen as confirmation of a new bullish trend. If this falling wedge breaks to the upside, the initial short-term target is usually the same height as the widest part of the wedge. That is, an upward move equal to the base width of the formation can be expected. However, the impact is not limited to just the short-term target. Price action following such breakouts often becomes part of a broader trend. In this context, the breakout can represent not only a bullish signal, but also the beginning of a trend reversal. At this point, the context in which the formation develops is also highly important. If the falling wedge is forming at the end of a downtrend or near a significant support level, the likelihood of a successful breakout increases significantly. Looking at the current chart, this wedge appears to be forming near a key support area where price has previously bounced. This adds strength to the pattern, as technical formations aligned with support zones tend to inspire greater confidence and result in increased buying activity. Another aspect investors should closely monitor during this process is how the price behaves as it approaches the upper boundary of the wedge. If the price tests this boundary with increasing volume and prints long green candlesticks, it indicates that a breakout may be imminent. Careful examination of the chart clearly shows that a distinct downtrend structure has formed on the RSI indicator. The RSI is an extremely important oscillator that is often used in technical analysis, showing whether the price is in overbought or oversold territory. However, RSI not only shows these two zones, but also trend breakouts, which can provide highly effective signals for predicting future price movements. In this context, this downtrend structure that is formed on the RSI reveals a very noteworthy and important technical situation that should be closely monitored. In the current situation, the RSI values have been moving in a downward channel for some time. This falling structure suggests that price action is also generally under pressure and that buyers are not yet strong enough. However, falling RSI trends in technical analysis don't always last forever, especially when it approaches critical levels and starts to generate positive signals in combination with some other technical indicators. A breakout of these falling structures can lead to a significant turnaround in the market. There are some signs that suggest that this downtrend on the RSI is nearing its end. In particular, the weaker reaction of the RSI each time it hits the lower bands suggests that the sellers are losing their strength, the market is getting tired and is now looking for a new direction. RSI trends are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.